heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York, this is Bloomberg Technology. Coming up, Nissan in talks to merge with Honda. Why tech giant Foxconn catalyzed the auto deal discussions. Plus, Databricks valuation rises to $62 billion. We'll sit down with the CEO to discuss the company's AI strategy and its expansion. And all eyes on Micron earnings after the closing bell. Can AI demand deliver? But first, let's check in on these markets, because it's all eyes on the Fed, of course, from a macro perspective. And we've got some cautious trading ahead of that. We're just up, well, flat on the day when it comes to the Nasdaq 100. More movement when you look beneath the surface. Let's dig into some of the key additions. From a points perspective, it's all about Nvidia today. We're up more than 4%. Of course, that adds whopping amounts in terms of market capitalization when you have a $3 trillion company on the move like this. But it's not enough to really offset some of the drags. Broadcom once again selling off for a second straight day after we saw a whopping 38% rise after its earnings. Profit taking still one to watch when we're looking at Broadcom. And I keep looking at the chip makers because it's sticking on Micron. We're up 2% ahead of its earnings after the bell. Can we see high bandwidth memory deliver? Can we see AI demand deliver from Micron, of course, key US chip company? We're going to bring you more on that later in the show. But first, let's get to this key story of the day, the merger discussions. Nissan in talks with Honda. And it would be a deal that could create the world's third largest automaker with a better chance to compete with the likes of Toyota and even Tesla in the EV space, for example. Now, according to reports, the discussion between the two, they accelerated after Foxconn, the Taiwan-based producer of iPhones, actually approached Nissan about taking a stake. Bloomberg's Craig Trudell joins us on more. So interestingly, once again, it's Japanese companies trying to fend off international investors.
Yeah, I think this is a case of a company in Nissan that has been challenged for years now, and really since the moment that Carlos Ghosn was unceremoniously taken out and arrested, actually, by folks in Japan. There was really concern within the government there about the long-term viability of this company, and I think a desire to kind of drive them into the arms of Honda. I think Honda was reluctant, and perhaps Foxconn, with its interest in entering the auto industry, its interest in particular in electric vehicles, knocking on Nissan's doors. I think it is sort of indicative of the sort of prospect that would only further alarm the Japanese government.
I remember back in the day talking to Carlos Ghosn about the Nissan Leaf. He was really upbeat about the scale of the market they had in electric vehicles, but now it pales into comparison to a Tesla, for example. How would the combined units be beneficial?
I think importantly, it would help Nissan in a real sort of blank space, which is hybrids. And a few years ago, we would have sort of been talking about would hybrids have a future? Are Teslas the way of the industry going forward? I think we've seen this real renaissance, particularly in the U.S. market, but also in other parts of the world where it's clear that consumers are still not ready yet to pull the trigger on a Nissan Leaf or a Tesla. It's been the case that Nissan has had a lot of issues, but one of them has been the complete lack of hybrids in the U.S. market. Honda really has some strength in that regard and would help Nissan to better compete if these two were to combine.
Although I'm not sure hybrids will help in California in the future. Just talk us through what's coming from the Biden administration in terms of California regulations compelling people to have EV, zero-emission cars in the future.
Yeah, California, announced intentions quite a while ago to phase out combustion cars from 2035. In order to actually, sort of enshrine that and really protect that, the state needs to go to the federal government and get a waiver. And there's a precedent for this going back decades, where California, because of the issues, unique issues it's had with air quality going back, many years ago, There's precedent for the state to be able to set its own standards separate from the federal government, and there are many states that follow and adopt California standards. So this is a case of the Biden administration kind of making more difficult on its way out the door any effort that the Trump administration, I think, is inevitably going to try and take a stab at the various waivers that California has had to try and set tougher policies for the auto industry.
Yeah, we'll see how it survives the next administration. Craig Trudell, just a brilliant roundup of all things autos and EVs. Let's get back, though, to the semiconductor space right now, because that's really where we're looking at what's happening underneath the benchmarks. Micron, of course, reporting after the bell as well today. Analysts really looking for growth in the company's high bandwidth memory, as I mentioned. The products there, it's all about AI infrastructure. Surprise, surprise. Denny Fish is a man who knows exactly about all these things. Portfolio manager on the global tech and innovation team. Over at Janus Henderson Investors, you own all the big names when it comes to semiconductors. And kudos to you, because you've had exposure to the biggest rallies of the year, Denny. What do you make of high bandwidth memory, the focus on US chip makers to get into that space?
Yeah, I mean, we've witnessed probably the largest deployment of advanced semiconductor content ever in our history. And the reason that's happened is because we've advanced AI over the last couple of years. And, those advancements continue. I mean, we've really laid the tracks the last couple of years with pre-training of all these models from OpenAI, from Google with Gemini, Anthropic, and others. And what's really interesting now is we're actually making the transition from what we've seen with these models to reasoning. And that's a really big deal, because now we're going to start seeing the handoff in a pretty material way from pre-training and training to actually inference and time-based inference. And so that should continue to be quite good for accelerated computing. It's just the mix might get a little different over time. But as it relates to just GPUs, custom ASICs from the hyperscalers, high bandwidth memory, optics, it should continue to be quite strong.
Janus Henderson has some exposure to Micron, but I'm not seeing it, for example, in your global technology fund, for example. I'm interested, therefore, more about what you think about the shift that we've seen going on from all in on picks and shovels, all in on the infrastructure build out when it comes to semiconductors, but now people moving across to software, now people thinking that it's the application layer that people are more interested in.
Yeah, that's absolutely right. And, I actually think 2025 is going to be a really interesting year, because you can't put the investment into data centers that we put in over the last couple of years unless you start to monetize it. And we're actually starting to see the breadcrumbs, particularly over the last couple of quarters, from a lot of companies. And, you hit it on the head, the application software ecosystem, whether that's publicly traded vendors that are starting to actually talk about specific contributions to their revenue models, or a ton of, startups, obviously, that are, racing to, disrupt the existing vendors and take advantage of this multi-trillion-dollar opportunity. And what's really interesting is, the software industry, over the last 20 years, grew to, I don't know, $600–700 billion in aggregate as it expanded the software TAM. But as you really start thinking about what AI can do, this jump to reasoning, and where we're going from here, and it brings not only the software TAM into play, but this larger services TAM that can be attacked by AI, and that should be really good for the software ecosystem.
How are we going to start to see the wheat from the chaff here, though, Denny? Throughout 2024, in many ways, all boats have risen until the second half, and then we started to pit winners against losers. Are we going to see that continue? Look, we take a case study of Adobe just not managing to deliver when it comes to how much generative AI is going to get to their bottom line, compared to Palantir that has just exploded ever higher because of the AI opportunity.
Yeah, well, that's where we're at. And I mean, we've actually seen a narrowing in the semiconductor ecosystem in terms of the winners as we look at picks and shovels, and that's to be expected. Every time there's a big theme like this, you get a rising tide lifts all boats, and then you get a narrowing of it. And, and I think that's what we're going to see across, the rest of the tech ecosystem, including software in 25. As you said, we'll separate the wheat from the chaff. The companies that are actually having meaningful contribution from AI, they're going to get higher multiples. Their growth is going to accelerate. and it's going to be goodness. And then there are going to be companies that are clearly struggling to get to the right side of time, as you mentioned. And Adobe's, and it's an interesting case study because it's been a heavily debated stock in the investment community for the last couple of years, as investors have gone from Adobe being on the right side of time as it relates to AI to potentially being on the wrong side of time.
Talking of wrong side of time, many trying to pass what the right or wrong side of the next administration is going to be. This is going to affect, for example, some internet names I know that you focus in on, Denny. And at the moment, we've got the breaking news that the US Supreme Court is going to hear arguments over a TikTok divestment. We're going to dig into that in a moment. But we do see regulatory implications for a lot of companies coming. How do you navigate that?
Yeah, well, not too differently than how we've navigated it for the last handful of years. And what I mean by that, we've had a very hostile backdrop for the last 4 years. So is it going to get worse? It's probably hard to get worse. Is it going to get better? Might get a little bit better in certain areas, but I expect it to continue to be a difficult environment for large cap tech. That diminishes the opportunity for them to do M&A. And then it also, we will continue to see aggressive postures from the DOJ like we've seen with the Google case.
Denny Fish, portfolio manager at Janus Henderson Investors, really taking us across the whole breadth of the tech ecosystem. We thank you. And look, let's just dig into that breaking news now on TikTok. The Supreme Court has announced that it will hear TikTok's challenge to its US ban on January the 10th. Just days, of course, before its potential ban or divest argument coming January the 19th. We're seeing the implications for Snap, for example. Snap shares currently falling. Meta shares have been paring their gain on the news. Now coming up, cracking down on China-made chips, the latest action being taken by the Biden administration to combat national security and competition concerns. That's next. This is Bloomberg Technology. Back to the breaking TikTok news. Crossing the Bloomberg terminal is the news that the Supreme Court will indeed hear TikTok's arguments on January 10th before a potential ban, which is likely to come into place on January the 19th. Bloomberg's Kaylee Lyons joins us for more. Of course, this is all regarding it's either to divest or be banned on January the 19th, but they've managed to get the Supreme Court to hear the argument.
Yeah, of course, TikTok, since this law was first passed in a bipartisan manner by Congress and then signed into law by President Biden earlier this year, has contended that it violates the right to free speech embedded in the Bill of Rights in the U.S. Constitution. So that is the grounds with which TikTok is pursuing this appeal at the Supreme Court after having lost an appeal in the D.C. Circuit Federal Court of Appeals, which voted 3-0 against the company's argument, saying that Congress was well within its rights, within concerns over national security, to put into place this ban. So we'll see how this goes on January 10th. As you say, Caroline, it's just 9 days before this ban is set to go into effect. But keep in mind, this Supreme Court does have a conservative majority, 3 justices of which were appointed by then President and now President-elect Donald Trump, who earlier this week at a press conference in Mar-a-Lago, when asked about the TikTok ban, said that he has a warm place in his heart for TikTok, talking about how he does think it's one of the reasons why he was able to pick up more of the youth vote. And at Mar-a-Lago on that very same day this week, he met with TikTok CEO Shou Chew. So it'll be interesting to see if we hear from the president-elect on the Supreme Court's decision to hear TikTok's arguments on January 10th.
It's having market implications. We see Snap, for example, losing some market value on the back of this as people try to price in whether or not TikTok will be remaining as a competitor. Meta also paring some of its earlier gains. Kaylee, all of this comes in the context of US versus China. We've had the breaking news today that Biden is going to be announcing a Chinese semiconductor probe here in the coming days, another area of tit for tat.
Absolutely. And this one is interesting, Caroline, because this probe will specifically be looking at foundational chips, the older generation ones that, of course, are the backbone to everything from cars to smartphones. Knowing this administration already for the last several years has been putting into place export controls around advanced semiconductor technology. So the things that go into, say, artificial intelligence, trying to restrain China's ability to control that technology. But the concern that this White House still has in its waning days is that China, because it's still producing these older chips, is going to be able to flood flood the market with them and therefore make, say, American companies less competitive. Already, this administration had announced that they would like to raise the tariff on older chips from 25% to 50% by 2025. But according to people familiar with the matter, the feeling of the administration is that is not enough to actually adequately protect competition, hence the launching of this investigation. The rub, Caroline, is while this investigation will be launching, the inauguration, where Joe Biden will leave the office and Donald Trump will take it, is just over 30 days away. So ultimately, the conclusion of the probe, the findings, will be left up to the discretion of Donald Trump as to how to handle them, whether that will be tariffs or other restrictions around trade. We do know, though, that the president-elect is not shy when it comes to tariffs in China, Caroline.
He loves the word. But Kayleigh, just set the context there, because also we know that he did invite President Xi, we understand, to the inauguration. So could a lot of this end up not being implemented because deals are done?
Well, that's entirely possible, and it's a live conversation here in Washington as to whether or not the tariffs that Donald Trump has threatened, not just technology, but all goods coming from China, are just a negotiating tactic, a way to start the conversation to extract more from China that he would see, basically a way to use leverage. That remains to be seen, but it will be up to his discretion if he does want to act, if these findings do conclude that there are unfair trade practices China is involved in when it comes to this very critical technology that the U.S. has already heavily invested in developing here in the States. I would note as well, Caroline, that while a lot of this is the discretion of the president, Congress is consistently acting hawkishly toward China as well. It is Congress where the TikTok ban originated, where we've seen a lot of restrictions passed through law. And in the continuing funding resolution that was just released last night, it also includes language related to outbound investment into China restrictions. So this is something we're seeing really across the board.
Kayleigh Lyons, thank you very much indeed. All things US-China. Now, it's time for Talking Tech. And first up, the risk of blackouts. They're going to increase for most of North America over the coming decade, according to a report by a grid reliability regulator. Now, the report underscores utility challenges as demand is forecast to rise the most in decades, of course, driven by AI and the electrification of the economy. Plus, a new court order issued Monday says TikTok must turn over its source code and financial data. This after claims from the Chinese tech company Beijing Meishi Network accused the social media platform of copyright infringement and misappropriation of trade secrets. And Meta's Instagram is expected to account for half of the company's ad revenue in the United States. That's according to estimates from research firm eMarketer. Instagram is now expected to top $32 billion in U.S. advertising revenue in 2025, up more than 24% from the current year. Coming up, Sandbox AQ announces a major new funding round. CEO Jack Hidari is with us. For next, we're going to be discussing the company's plans to use, of course, AI and innovate everything from medical devices to cybersecurity, AQ, AI, and quantum. This is Bloomberg Technology. Solutions company Sandbox AQ has closed its latest round of funding, raising $300 million, valuing the company now at $5.6 billion. The company says the investment will be used to further its development in areas like drug discovery, cybersecurity, navigation, and medical devices, all using its own AI techniques. Sandbox AQ CEO Jack Hidari is here with us. Let's talk large quantitative models. How is what you're building different from the large language models we've all had to wrap our head around?
Caroline, good to see you, first of all. Great to be here live on set. In the world of Zoom, it's great to be in person for once. This is a fundamental new area of AI. So I think we're all familiar with ChatGPT. We're all familiar with large language models. Wonderful set of applications. Millions of people using it around the world, as it should be. Now comes large quantitative models. And when we look at the majority of the business sectors, the economy, we look at biopharma, chemicals, energy, financial services, these are all quantitatively driven, not language driven. And so the majority of our economy is actually depending on quantitative relationships. An example would be in biopharma. Let's say we want to create a new drug for a certain cancer or Alzheimer's or Parkinson's. We probably don't want to take the drug of a language model trained on Reddit and cat pictures. Probably not recommended. But we can use large language models to summarize scientific literature, for example. That's wonderful. But when it comes to actually the quantitative relationships of creating the drug, seeing if it fits at that receptor, and developing that all throughout the clinical trial, that's a job for large quantitative models. The data is fundamentally different. The models are different. The whole field is a new area.
And how practical is it in its application right here, right now? When you're raising $300 million, what is that for? Is that for talent? Is that to actually drive the necessary improvements in the models? What is it that you're going to be fine-tuning?
Well, the good news is, over the last 2-3 years, since our spin-out, we've now proven with customer after customer that it actually is having impact. For example, UCSF, University of California, San Francisco, one of the best places for biomedical work. Stan Prusner is a Nobel laureate there, using our software to advance his drugs for neurodegenerative diseases right now. So this is having an impact today.
Yeah.
It's running today on the GPUs, on NVIDIA and TPUs from Alphabet. It's running right now. And these are quantitative models, again, not trained on the corpus of words of the internet, but trained on the relationships of chemicals and atoms and those kind of dynamic relationships. So it's having impact right now, Caroline.
Because what's interesting, of course, you talked about a spin-off. It was a spin-off from Google. Your chair is Eric Schmidt. We understand the sort of way in which the company first was born. And then we look at what's happening with Google. Quantum, the Willow chip, everyone's deeply excited about real applications to quantum in the next 5-10 years. Is that realistic?
Well, it's a great question. Why do we call our company Sandbox AQ? What's the AQ? A for AI, Q for quantum. And so years ago, we already saw that advanced compute really has two engines. It has the AI engine of large language models, large quantitative models, LLMs, LQMs, but it now also has the Q, the quantum. And the breakthrough that Google announced just last week, our colleague Hartmut Nevin, who announced that at the Santa Barbara campus of Google, is a wonderful example of the milestones being achieved in the quantum hardware space. We don't build quantum hardware, we use quantum hardware as it progresses to business impact. Today, quantum computers are very early, but what Google showed last week with the Willow chip is that as you scale the number of qubits, you can actually decrease the number of errors. That was a critical milestone, Caroline, in terms of how we can advance quantum computing. So the future that we see is one that has GPUs and QPUs, quantum processing units, together, working together in a mesh in the hybrid cloud. That, I think, is the future. And we're going to see, I think, very significant progress over the next 5-6 years in the quantum hardware itself.
All of that means your applications become, well, more broad. How quickly are you going to be making money from this for your investors that we've just been seeing?
Well, the good news is we're already generating revenue today. We're creating a lot of value for our customers today. And so be it in biopharma, be it in the chemicals and material space, be it in battery chemistry, we know the importance of batteries, not just for electric vehicles. Actually, the bigger market for batteries are stationary batteries to store energy from renewable sources. That's actually the bigger market, but we must leapfrog beyond lithium-ion technology. This, again, is a job for an LQM, a large quantitative model, versus an LLM. And so I think that the number of applications are really numerous, and we raise this money in order to advance our investment in the product development. We do want to hire more PhDs, more software engineers. We have quite a few already, but it's time to hire more. So those listening who have those kind of skills, please contact us.
I will. Jack Hidary, he's Sandbox AQ CEO. Next up, MicroStrategy. This is Bloomberg Technology. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. A quick check on these markets. NASDAQ, well, look, we are trading sideways, let's call it, ahead of the Federal Reserve. We're expecting, of course, that quarter-point cut. We're currently totally flat, but underneath the surface, there are key point contributors coming from NVIDIA, actually rallying on the day after, of course, it's been in correction territory. But let's dig into what's happening in the crypto side of things, because another risk asset of choice that's trading in a sensitive manner ahead of the Federal Reserve is Bitcoin. We're now at 103,000. Remember, yesterday we managed to peak above $108,000 per token. So we're just seeing a little bit of money coming off ahead of also the holidays as well. MicroStrategy down, as of course it's basically a Bitcoin proxy here. But interestingly, we were hearing from Michael Saylor a little bit earlier. Washington considering a potential crypto regulation, how it's going to basically iterate. And MicroStrategy is continuing to be buying Bitcoin, bringing its total investments to roughly $45 billion. The chairman, Michael Saylor, spoke to Bloomberg earlier on why the company is investing in the digital asset and continuing to do so, and whether he'd consider a role in shaping new crypto policy. Take a listen.
I've met with a lot of people in the incoming administration, but I couldn't comment further than that.
Okay, can't comment further than that. I was going to ask you about plans, but instead I'll ask you about whether or not you would be willing to serve in the Trump administration in any capacity. Bloomberg has reported that there potentially could be a crypto advisory council. Is that something that you might be interested in?
You know, I'm always willing to provide, thoughts on constructive digital assets policy, either in confidence or publicly. And if I'm asked to serve on some sort of digital assets advisory council, I'm probably would do so, yes.
Michael, I also want to talk to you about MicroStrategy, your own plans. It's amazing. You have announced plans to raise $42 billion over 3 years. You announced that back in October. But the rate you're going at, and this is through convertible debt offerings, stock sales, the rate you're going at, you could fulfill that target by January. Are you planning to lift that cap and line up more facilities in the pursuit of more Bitcoin?
Yeah, when we announced it, it wasn't clear how enthusiastic the capital markets would be, but we got a very enthusiastic reception. And then after November 5th with the red wave, we saw a big sea change in the political environment. And so we went faster than we had thought we were going to go on October 30th. Our goal is to continue to raise capital primarily through fixed income markets. So we'll pursue preferred stock or convertible bond or other equity-linked financings, as long as it's accretive for our shareholders. When we get through the 21 plan, which is $42 billion in capital, we'll revisit our capital plan, and we'll put in place a new plan subject to market conditions at the time.
MicroStrategy Chairman Michael Saylor on political roles, on the future of his Bitcoin buying. Let's talk a little bit more now with the Defiance ETF CEO and CIO, Sylvia Jablonski. You've got a Defiance daily target, 2x long MicroStrategy ETF. Yes. How is demand for those sorts of leverage products on MicroStrategy at the moment?
Demand is on fire. That's the best way I can put it. You know, we've seen billions of dollars of assets flowing into this ETF. It's by far the fastest growing ETF that we've ever seen. And I think the reason is that, you know, Bitcoin has just taken off. And whether that's because of the commercialization of Bitcoin, ETFs holding Bitcoin, favorable policy with the new government coming into office, I just think that there's this huge tailwind. And who is the best proxy for Bitcoin? It's MicroStrategy. So stock listed on an exchange. As a single name, it trades as a leveraged version of Bitcoin, and we've now leveraged it 2 times. And so this, short-term volatility traders love the ETF, and it's just been wildly popular.
And from an institutional perspective as well as a retail perspective here?
Absolutely, both institutions and retail. I think what's great about the institutional angle is that some institutions are still sort of weary about holding Bitcoin itself, whether it's through the digital wallet or using an ETF for it. But, MicroStrategy is just a stock, right? That trades on an exchange, and so they are able to put that in their portfolios. And I think that shores up a lot of demand.
A very volatile holding in their portfolios. Talk to us about, therefore, when you're looking at the hype cycles around whether it's crypto or AI, compare and contrast how much you still seeing people wanting to pour into the infrastructure side of the AI bet and other ETFs you have exposure to there.
Yeah, I think that the demand is at its all-time high, right? Ever since the ChatGPT moment and now the Google Willow moment and, crypto and kind of all the buzz around that. There's trillions of dollars of cash sitting on the sidelines. There's the biggest wealth transfer of our generation happening as we speak. And, Gen Z, Millennial, Gen X, kind of, the younger traders this is where they're allocating their funds to. And, retail has definitely spoken, institutions have definitely spoken, and they're looking for that fourth industrial revolution allocation. And the biggest trades right now are basically quantum and MicroStrategy.
Let's go into quantum, because we just had Jack Hidary on from Sandbox AQ and talking about how we're starting to see quantum theory be put into practice. You just mentioned Willow and their breakthroughs over at Google. Which other stocks should people be looking at? Are they only dominating on the big companies that have got exposure to quantum, like an IBM or Google, or are they going smaller?
Yeah, and so we kind of looked at this space, and what I liked about what Jack explained, his company has the A and the Q, the AI and the quantum, right? So ChatGPT, AI is, kind of version 1. Quantum is taking everything to the next level. So you need quantum in order for AI to be efficient. You need to process that data quickly. It will help, essentially healthcare, cryptography, aerospace and defense, blockchain technology, anything you can think of will be bettered with quantum supercomputing power. And so the most popular stocks right now are a combination of large caps and small caps, right? So you have like the IBMs, the Googles, the NVIDIAs. Some of these companies are actually very relevant, HP, IBM. And then the smaller names that are just taking off hundreds percentage points of performance are companies like D-Wave, IonQ, Rigetti Computing. We actually married them in our ETF Quantum. So you have the large caps and the small caps, so the ballast and the quality earnings with the high flyers and the movers that are just winning.
Just look at these high flyers for a moment. Like, we're up basically 1,000% on D-Wave Quantum over the last year to date, 200%. Yes. How cautious have been people getting into these wildly volatile names, even if they are up and to the right?
Yeah, I think that people have been doing a combination of both, right? So they're getting into these smaller names, but they're also looking at things like the ETF that balances. Here. Yeah, and you want to kind of like balance it with the Googles, right? I think Google is a company that does many things and can perform quite well, and so it kind of like balances your risk on the small caps. But also, again, it comes back to the administration. Mm-hmm. Administration would be very favorable of quantum. Rate cuts, kind of more freedom for M&A activity in theory, and so that also helps. The backdrop helps, along with just the super high-flying technology that's moving forward.
All eyes on the Fed in about an hour or so's time. Thank you.
Thank you.
For taking it back to macro policy too. Defiance ETF CEO Sylvia Jablonski. Happy holidays. Now, let's just talk about Elon Musk and SpaceX for a moment, because they've repeatedly failed to comply with federal reporting protocols aimed at protecting state secrets, triggering several federal reviews. This is all being cited by the New York Times. They're looking at sources there. Now, the Air Force also recently denied Musk a high-level security access, citing potential security risks. Meanwhile, here's what SpaceX President Gwynne Shotwell said about the company's relationship with the Air Force at an event with the Center for Strategic and International Studies just yesterday.
We had a rough relationship early on with the Air Force, but we have, over the last probably 10 or 11 years, I think developed a really great relationship. Frankly, I think it takes a long time to build trust, and I think we're finally there.
Elsewhere in space, NASA announcing another delay in the mission to bring back 2 U.S. astronauts who were stranded for months on the International Space Station, and now saying they will remain there at least until late March. Tuesday, that's it, time currently for home. Coming up, Databricks' $62 billion valuation. We speak with Ali Ghodsi, that's Databricks CEO. That's next. This is Bloomberg Technology. Databricks raising $10 billion in new funding, bringing the software maker's valuation to $62 billion. The company says it intends to invest this capital towards new AI products, to acquisitions, significant expansion in its international go-to-market operations. For more, Databricks CEO Ali Ghodsi joins us now. Boy, it's been busy. Let's just talk a little bit about the AI applications and just where you see the wide open space at the moment for Databricks.
Yeah, thank you for having me on. There's so many applications across many different verticals. Lots and lots of customers that are using us for AI and data processing, I should say. Starting with Rivian, for instance, the car maker uses us to optimize the batteries of their electric vehicles. Walgreens uses us to figure out how much should they stock up their inventory and their supply chain. It's super important, right, for them to be able to optimize their prices and lower their TCOs. And then Square or Block, they used to have this app where you swipe your credit cards, but to set that up in a store used to be pretty complicated a few years ago. Now it's super simple because you can use generative AI and just tell it, hey, I have these 5 products, this is the price, and it sets itself up just using generative AI.
So before you were unifying, democratizing data, now it's about the applications of AI, but for that also you need talent, Ali. And I'm interested as to where the next layer of talent is coming from, where you need to hone in on, how you get them on board.
Yeah, I mean, there is a crazy war for AI talent right now. I've never seen anything like it before. I mean, talent war was already crazy last 10 years for software engineers. Now in AI, it's just completely insane. So we are going to use a lot of the proceeds towards that to be competitive. There's a lot of talent, was hired by OpenAI and by Anthropic. What's happened is we've hit this thing called the scaling wall now, You know.
Oh, you think there is a wall,
know,
do you? Because Sam Altman's determined there isn't one.
There is a wall. I think it's pretty clear that even those big companies, many of them are now investing in other techniques, not the classic scaling laws. So that actually also has opened up the opportunity where people are now going, there are more companies now that can participate in this next chapter after the scaling wall or the scaling laws. So that's also very exciting times, but you got to pay up for that talent.
You got to pay up. Do you pay up for US talent? I'm going to make it personal, Ali, because you yourself are an immigrant. Originally Iran, moved over to Sweden, come over to the United States. And I'm interested in how much you look abroad, particularly in the context of the next administration.
Yeah, no, look, not because of the administration, but when there is this crazy talent war going on, you of course start looking at, where could we go where it's not so intense, right? Where the competition is not so intense. So we look everywhere. I think Eastern Europe is super interesting. Very smart people that live there, and it's just different. You don't have that intensity of a competition around the talent. Europe, and of course Asia, many locations. So we're looking at all of those. But still, you don't want to ignore Silicon Valley or United States. It's still where you have the highest talent density. It's absolutely necessary. So we're going to compete here as well.
Is it about acqui-hiring? I mean, you've been acquisitive, and some of that in the ML space, Mosaic ML, for example, some of that in the data side, Tabular, for example. Are you going to make acquisitions because of the people or because of the products being built?
Well, both. There's three things you could get. You could also get revenue, right? But there's a lot of startups that started, super talented people, amazing IP, but they quite didn't get to the revenue. So it's, two birds with one stone. You get that talent, and you get their intellectual property. And in this race, you need that, right? You need both of those things. So absolutely, we're going to actually double down on that even more now that we have this funding.
It's a race, but it's also a race versus your competition at the moment to be getting those clients. Who are your key competitors? Because I know on LinkedIn you've been throwing some shade at Snowflake, for example. We all think about Microsoft. Are they the two competitors for you?
With Snowflake, I would say that was in previous years. I would say a couple of years ago, we were really intensely focused on competing with them. Now in this AI era, that's kind of shifted. And Microsoft is a super important partner. In fact, Microsoft, Amazon, and Google are investors in Databricks. There is some competition. They have products that sometimes compete as well. But all up, those companies, the majority of their revenue in the cloud is storage, compute, networking. And that might be 70% of their revenue, I'm speculating. And we're a killer app for that. We drive so much storage, compute, and networking. In fact, we drive close to 30 million machines in the cloud every day that we launch. So we're super close partners, and they love us as customers, and vice versa. But there's that little competition happening as well, and probably that's going to expand over time as AI is becoming more and more important.
I guess one big game of frenemies out there when it comes to technology. Ali, I'm interested in particular when you're thinking about how you're raising money. 10 billion is a lot. Thrive Capital front and center there. You've also got who's who of other investors with A16Z, for example. What's interesting is you're also going to the debt markets, we understand. How is that going? Because that seems to be trying to offset the tax implications to keep your employees happy.
Yeah, I mean, that's a great point. I think let's take them one by one. Let's take the equities. The equity raise, for us, it's super important to get partners that are long-term oriented. We want investors that are going to say, we're going to be with you probably 10 years, 20 years. This is a great price. We'll buy again more, and later in the IPO, we'll buy even more, and we'll stick, to your plan. And we'll let you implement that long-term vision and not become too short-term oriented, the 90-day quarterly sort of mindset. So that was the thing we optimized for, and we were pretty picky. We had 19 billion of interest in this round, and we basically cut people back to half of that, and we said no to most investors. And then on the debt financing, that makes a lot of sense as well. If the company is growing in valuation so much, then actually you're better off just getting a big loan, even if interest rates are high and you're paying, let's say, just make that number, round number, 10% interest on that. You're better off taking that as a loan and paying that back in a few years, because you can pay that back in equity then, and presumably the company has doubled in valuation. Let's call it in 2-3 years.
Okay. 120 billion, looking at it for the next couple of years. And you've given us the time scale potentially for an IPO as well. Ali Ghodsi, always great to have you on. Databricks CEO, congrats on the fundraise. Meanwhile, let's talk about concerns over AI's global boom. Receiving bipartisan support in Congress in a framework report released on Tuesday, recommending guardrails and regulations on AI, really being detailed in an effort to protect Americans and maintain national security. We spoke with Senator Amy Klobuchar of Minnesota, who had this to say on regulating AI.
My view has been that we should have rules of the road in place, by the way, for all platforms. I have been way out there, as I think you know, in terms of getting not just pornography off the internet, but other very, very difficult things that are on there right now.
Let's go back to those regulatory proposals. Bloomberg government reporter Omar Sadiq joins us now. Omar, it was a comprehensive list of recommendations. What were the key takeaways for you?
Right. Congress released this major policy paper this week addressing AI on various areas. They touched on education, healthcare, financial services, agriculture, national security, because they're trying to examine what AI's impacts are on each of these areas and how Congress should respond. The key takeaway is that Congress is seeking to strike this balance. They want to promote AI because they believe it has tremendous opportunity, to unleash human productivity, to solve complex issues. But at the same time, they're well aware of AI's risks. And so they want to protect the American people and uphold their civil liberties.
Very briefly, urgent is what we expect to come next from Congress.
Right, so that's the key question. How do they translate these recommendations into action? We saw Senator Amy Klobuchar there. She's proposing, to combat this issue of non-consensual explicit deepfakes or deepfake pornography, which has been around for a while, but AI has only accelerated the spread, which has alarmed many, many lawmakers. And so that's an area where Congress is eager to act quickly. Another area that Congress is eager to act is to increase, scientific research and development in AI, expand energy infrastructure to meet AI demands, train the workforce, educate folks on AI, and even, clarify existing intellectual property law. And so there are many, many key recommendations that are proposed in this report, but it's just a matter of how Congress then transitions into translating that into legislation that gets signed into law.
We'll see how it happens under the next administration. Omar Sadiq, thanks for breaking it down. Now coming up, all eyes on Micron's earnings after the closing bell. We're going to discuss it. It's next. This is Bloomberg Technology. Let's get back to Micron now. Scheduled to report its fiscal first quarter results after the market closed today. Bloomberg's Ian King joins us some more, all about high bandwidth memory.
That's right. Obviously, the biggest story in chips has been NVIDIA. Guess what? NVIDIA's chips need a lot of memory to train those AI models. And really, it's a case of how much can SK Hynix, how much can Micron supply NVIDIA with. And this has been a big story for them. A lot of high margin business coming their way. But on the flip side, the markets that they depend on, there's a lot of debate about how well they're doing.
Yeah, I mean, we're expecting about an 80% increase in revenues, for example. We're up on the day, but it's been a turbulent time for Micron stock. Still, it feels as though most analysts say buy it at the moment. Is it going to be about the forecasting? What are the pitfalls here, Ian?
Yeah, no, that's exactly it. I mean, people are kind of tentatively positive. And the concern there is that, look, still a lot of money that this company gets comes from the smartphone market, comes from the PC market. And guess what? They're not that great. There's still inventory around. So let's not get too carried away with this AI thing until it really shows that it can take over completely.
But meanwhile, everyone's desperate to get totally in on stocks like Broadcom, even if they're just giving us total addressable markets. Do you think we will get a signal of what the market will be like for Micron?
I mean, they have been talking about this for a long time, and I'm sure will continue to bang that drum and talk about how this is a different opportunity for them. Once they're designed in, it's not the old commodity market. They'll give us all of that, I'm sure, and they're probably right about that particular area. The key is whether it's big enough to offset what's going on elsewhere.
Yeah, just briefly, China an issue?
China is always an issue. There's a concern there that the access to that market becomes an issue, and also local competitors, given the competition between the two countries and the bans and all of the trade war. That's clearly something that's on people's minds.
Ian King, you're going to be a busy man later. Thanks so much for stopping in ahead of that set of earnings later in the day. Meanwhile, that does it for this edition of Bloomberg Technology. You do not want to forget to focus in on the Fed in a minute, but also check out our podcast. You can find it on the terminal, as well as online on Apple, Spotify, and iHeart. This is Bloomberg Technology.